And so I'm going to talk about how you could have traded if you would have been in here pre-market. You opened up your charts and you saw the market doing this, how to assess overall market context, and then how to trade in this specific context. So the main thing that we look for when we're assessing context is where are the trapped buyers and sellers. You can see there's trapped buyers up here. Market pushed up, big spikes up, attempts to hold the bottom of that range, and then it crashed down. We're talking about this time frame over here, right? So all of these trapped buyers, we had second entries to sell those, and now we can actually say that there's trapped sellers here because big push down, continuation, second attempt to sell right there. And so now we have trapped sellers. So when you have two types of participants that are in conflict, you get a market that is a little bit slower and pulls back a little bit further. All of these trapped sellers are having, they're getting liquidated. And every time we're coming into contact with the trapped buyers, the market's pulling back pretty heavily. So we can say, we'll go over this in a little bit more detail, but we can say that responsive buyers are in control as we're breaking new highs. There's a new high here, there's a new high here. When I say responsive buyers, I'm referring to people who are trying to enter positions as the market comes back to a better price. So the market pushes up here and we see that it comes back down to a value area, the higher volume nodes in there. And we don't have initiative buyers in control like we would see in a breakout or a strong uptrend, because every time we make a new high, we get a pullback, which pulls back for some time. So there's a couple ways that we can approach this. And really what we're looking for, if we've identified that the market has responsive buyers in control, is we're looking to take an entry where there are trapped sellers. And so we can use the fixed range volume profile to see, as these little nodes expand, where are traders accumulating. There's traders accumulated right here. Like if I move this way, you can see that, I guess that one's still down there, but the band is up here, right? And then value is shifted higher, and then we push down below that. That implies that this second attempt to short here is an area where sellers are trapped and we have a better price down here. So if we're looking to buy a retracement, buying a retracement in this area would be the way. And if you look carefully, you can actually see the exact same structure here where we have a push here and then a secondary push here. It's essentially the area where the downtrend failed. So if we think about multiple time frames, the longer term time frame is in an uptrend. So we're trading in the direction with that, and then we're trading against the failures of the shorter term time frame, which take place at the second entries, or they take place, if you want to make it super basic, you can just draw a trend line and say like, okay, there's a trend, where did it fail? Right there. Here's a trend. Where did it fail? Right down here. So the overall basic concept is you look at two time frames. One, the larger time frame, what's it doing? Identify the context. So we're breaking above these highs, but we're moving into an area where there are trap buyers. So we can assume and infer that the market is going to bounce between these two. And so if we're looking to trade against failures, we don't have immediate failures pushing the price higher. We look for where did the downtrends break. And then we saw those using the candles. We can see there's a secondary push here. There's an area to buy right here. We can see there's a lower high here and another push down there. And so we'd be trying to buy inside of that. And if we use the fixed range volume profile with delta as an input, we also see that there's trapped delta down there. So we could attack the trapped delta. Same thing here probably, I haven't actually checked. Lots of trapped delta in there, these red bands. And so I've listed this out here so we can say, how do we approach the market from a process? One, identify the market context, where are the trapped traders and who's losing. And then once you have your intermediate term context identified, attack the short term failures. So in this case, because we have a slow uptrend, we are looking for responsive entries where the downtrends failed. So we are actually looking to trade against initiative downside traders. So remember the two types. Responsive, price is getting back to a position where it's perceived as a better value for a more patient entry. And then initiative is when people are bidding the price up or down aggressively for various reasons. So in a responsive dynamic where we're operating responsively, this is an initiative sell. And so then we can attack the initiative sell. This is an initiative sell down here as well. And we could, I drew the line crooked, but you get the point. Could attack the initiative sell down there. And because the market is slow on the upside, you really just want to take profits in this. When there's resistance overhead, just take profits at the resistance. One more thing that I wanted to talk about, another way that we can approach attacking failed short-term traders, is if we look for where the second entries were and then where the LVNs on the other side of those are and where those have failed. So if you think back to the 3-minute video, the context I was talking about there, when you have a second entry, taking a trade at the LVN on the other side is good. If you don't know that strategy, I will link it in the downside or on the bottom of the video. But the point here is when this level, we'll take a look at this one. These are second entry shorts that should hold if this right here was going to be an uptrend. So just try to remember that concept. But if this was going to be an uptrend starting here, these are second entry shorts. Once this has come below that, so once it's come below this level here, it's now in play that we would sell an LVN on the upside. So hypothetical downtrend continuation. So we're trying to trade against failed initiative uptrend buyers. This is the uptrend that failed. We would be trying to enter against the initiative uptrend buyers. One of the ways they do that is an LVN. So you see, once we go down here, this should actually be a short level and we see a minor response to that. But the market comes back above that, and then trading right there is a beautiful entry to take it to the top. It's actually the strongest entry. The other ones that I listed earlier were a little bit more basic. Put those first. If you made it this far, this is the real one. So there's another example with a little bit less of the technical stuff. If this is an initiative uptrend, we've made a new low here. This is a failure of this hypothetically. Selling right here should have worked. Crooked line again. Selling right here should have worked. Once we come back to that, the market just barely tags that. This is a 15-second chart, so it hits that and jumps right back up. There's an area for opportunity against that. So I wrote this out again just to keep your attention. In the longer term uptrend, trading against the failed attacks on initiative buyers present a favorable opportunity. And I think I spelled opportunity wrong. Wait, no, I didn't. Identify LVN that should be a sell location after an invalidation of a second entry, and when that breaks, enter there. So what does that mean? Well, if this is a downtrend continuation, we made a new low here. This is a big spike up right here. That's initiative buying activity. And then it fails. And then this should be an attempt to sell this. If this trend was going to work, selling here would have been the entry. That would have been the most responsive entry for a downtrend continuation. This downtrend did not work. That is the failure level of the downtrend, and it's the perfect entry here. You can kind of see another example of this here. If this is a attempt to hold the bottom and there's a second entry short, we'll just call that the downside right there. This was a buy attempt there. If this downtrend is going to continue, it doesn't quite show up on the fixed range volume profile, but you can see that this is a push up. It's initiative buying. If this downtrend was going to continue, this should have held here. Once you have a break of that, that's an entry there, and you can take that to the top there. As we get closer to the open, different market forces take place, but if we're just scalping against these trades in this slower uptrend, taking off at the resistance or towards the highs, this is a really good entry. We wait for the failure of a sell, and then we enter there. So in a shorter term uptrend, mixed state uptrend, failure of initiative buying, attempt to sell the failure of initiative buying, that fails. We have a longer term uptrend, we have a shorter term failure, trade against the failure, just to take it to a reasonable level for the intermediate term. I'm going to make a video later about what happened with all of this, but we can also see that once these start to fail, the trends have changed entirely. So I'm going to make a separate video talking about what happened here and how we scalped inside of this for a profit. But I wanted to talk about the market context. So one more time. Okay, so one more time to review this. Identify the intermediate market context. How do we do that? We go to a longer term time frame. Look to see where the trap traders are. Here there's trap sellers against trap buyers. So that gives us the context of a slow mixed state uptrend because the market is making new highs. So how do we approach that? In this context, we look for failures of initiative selling or out of position short-term sellers. How do we do that? Well, there's initiative selling right here, for example, but then also we can look to see where is an attack. Here's a better example of failed initiative selling. Here's the downtrend like this. Here's where that downtrend had its last push. Entering in that last push right here was viable. Another way we can do that is if we're looking to attack the failed attacks. So in this area here, this is uptrend initiative push right there, low volume node, big push up. There should be a sell right around here, and then it's there. This one, you know, continued a little bit further, but there's an entry level there. It's a viable entry. Also, if you want to be super basic about it, you can just use trap delta bands. You know, look here, where's value? Enter in the value. Tons of trap sellers here. Just set a limit here, your profit target's up here, your stops here. It's a very basic trade setup. If you want clarification on that, send me a message and I can explain this to you in full. The only other point I want to make is once you've identified the overall intermediate market state, like let's say we're trading before the pre-market, the open here, be aware of when it shifts. A lot of times people will get in trouble when they're thinking this, you know, we've identified correctly that this is a slow uptrend, okay, market's making new highs. However, this is a broken trend here. This is now a range-based market with potential failure levels up here. So if you were still trying to buy this down here without understanding the market context shift, you're going to be losing all your money. That's how that works. That's where it gets people trapped a lot of times, is a failure to recognize a subtle shift in context. It's a psychological phenomenon, but yeah, so be aware of market context, be aware when they shift, and then understand how to trade in each market context. I gave you some ideas, some things that work pretty well, generally speaking, in this type of market context, and then you can develop a playbook for different market contexts and how to operate in all of them. As always, thanks for watching the videos. I hope it was helpful. Subscribe to the videos if you're watching this. Notice something like 80% of the viewers are not subscribed. So if you made it this far, just click the subscribe button. Thanks.